You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it is time yet again for Volatility Views. It means it's Friday, time to look back on the week that was and indeed still is in the volatility space. Let's talk some VIX and some spikes and some VXXB and whatever the heck else you guys want to throw at us. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get us by now. Live every Friday, 1 p.m. Central. We bumped it up from noon to 1 p.m. Central not too long ago. 1 p.m. Central or on your podcast player of choice. And, of course, however you listen, make sure you hit us up. Questions, comments, insights, pearls of wisdom, or review on your platform if you like what you're hearing. We do indeed like to hear from you guys. And joining me on the old program today, we'll be joined in a little bit by the Greasy Meatball. He's getting himself situated, ready for showtime over there. Also sad we won't have Simon Ho joining us from T3 today, but the big time change over there in Sydney. They're jumping back. We jumped ahead here recently, so that adds another 2 hours to our journey, but I believe there's somewhere around 15 hours different from us now. So that makes coordinating the show a little bit challenging for them, but we'll get him back on one of these days when he's rested and ready to go. So holding down the MIAX hot seat today, we got Shelly Brown, the Executive Vice President for Strategic Planning and Operations over there at MIAX. Shelly, welcome back to the show. It's been a few weeks.
Thanks, Mark. Glad to be here. How are things?
Things are good. I'm ready to talk some volatility. I hope you got your volatility talking pants on, Shelly, because you're going to be talking the whole show. Just you. You ready?
Great. Glad to help, Mark.
All right. Let's get the ball rolling then with a little bit of our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where we do it. We talk about some volatility. It's a fun time to get things going. All right, there he is, Mr. Greasy Meatball. Fashionably late, as always. Let's see if we can add him into the madness that is all things volatility views. All right, there we go. Mr. Greasy Meatball, are you there, sir?
Oh.
There he is. Fashionably late, as always, sir. How are you?
I'm excellent. How are you?
Good. You sound like you're in a tin can. Where are you coming at us from?
I'm in my car.
Ah, that's probably
about
why.
5 minutes.
All right. Well, you enjoy your car ride. I'll kick things off here with a little bit of the old vol review. Like we mentioned, coming into showtime. This is one of those times, listeners, when I do wish we recorded the show on Thursday, because coming into showtime today, we're seeing both spikes and VIX Cash off fairly aggressively. Spikes off about a little over half a handle from last week, down to about 12 and a quarter. We're seeing VIX Cash right around that 12.30 level, off about around 3/4 of a point from this time last week. But oh, what a difference a day makes. A day or so ago, earlier this week, my prognostication for the crystal ball was pretty much spot on. I was at about 13 and a quarter, which was, I think yesterday was actually exactly where it was. But oh, what a difference a day, not even a day, a few hours makes. All of a sudden, we're seeing a little bit of a rally in the marketplace coming into the weekend, and the market's deciding to squeeze that last little bit of air out of the volatility balloon. And so, we'll see. Anything can happen over the course of the next hour, but not looking good here for my prognostication. Yeah, market's mostly up today, kind of depends where you're looking. The old school economy, aka the Dow, up the strongest, up about a full percentage point, probably on the heels of some interesting earnings. We'll get to that a little bit later in the show. S&P up about half a percentage point. So once again, kind of playing the Goldilocks out there these days. And tech-heavy NASDAQ kind of taking a break, up a paltry third of a percent out there. So interesting stuff, kind of depending on where you're looking. But let's go around the horn. Let's start, Shelly. It's been a little while since you've been on. I know you've been working diligently behind the scenes on a lot of interesting stuff for spikes. We had a little bit of activity actually during showtime last week, which we'll get to in a little bit when we break down the spikes, options, volatility. But in general, Shelly, what's been coming across your desk? What's on your radar from the past week as you're looking at the broad volatility scene, sir?
I spend a lot of my time, obviously, watching what's going on in spikes. I don't watch VIX a lot, other than, of course, they're a competitor. But we've been very involved in the new market and ramping Emerald up. So my focus has been a little bit off the volatility space of late, although I have had a lot of discussion with some of the banks of late. There's still a lot of interest on their part in the spikes product, but we haven't seen any big trades go up yet. And as I believe Simon shared with you last week, we get some good news from OCC as they're offering portfolio margin relief for those traders, market makers, and firms that are trading spikes or may want to trade spike options versus VIX options. So that should help us moving forward.
That is a big deal.
Really
That's not
nice.
It's not always the sexiest thing to talk margin, Shelly, but when people, we always see this progression for the audience too. They start maybe on the basic end of the retail spectrum, then as they progress up, and certainly on the professional institutional side, they get the value of it. It's not always a sexy. You don't usually lead with the margin conversation, but when you want to do some size and you want to put some positions on, and you start looking at how your capital is allocated, it starts to become a much more relevant conversation. So I think a lot of our audience, particularly on the size and the professional end of the spectrum, will certainly appreciate that. And by the way, Shelly, what are you doing launching a volatility product and a new exchange at the same time? Didn't anyone ever tell you got to pick one or the other, dude? How you doing both?
I asked myself that about a year and a half ago, and my decision was made for me by somebody that's a little higher up in the firm. But it's been a challenging project, or a pair of projects, but it's been a fun project as well.
Yeah, it's funny. I think it just goes to show, obviously we focus on the volatility space here, so that's kind of the lens through which we view things, but we haven't even had much of a chance to really discuss Emerald, which I guess is probably a good thing for spikes, taking up all the oxygen in the room out there, which maybe as a new exchange, almost you don't want to get discussed, right? Because that's, when they're discussing a new exchange, it's usually, they had an outage or something, right? There's not usually a lot in the headlines to begin with. So maybe that's a good thing that you're kind of keeping it under the radar a little bit, Shelly.
Yeah, well, fortunately, there hasn't been any outages. Emerald's launched very successfully. We're about our 29th or 30th trading day in, and we're about 1.3% market share already. So it's been fun to focus on. It's a little easier for me to talk about than spikes these days.
Yeah,
Spikes are coming around.
I have to say I'm kind of excited about the margin relief. I think that's going to be really, really fun for and makes trading these things a lot easier, and also should probably encourage some of the other brokerage firms to hop on board with getting it up. I know Mark didn't ask you this, but how's the progress on spikes with getting into some of the major brokerage houses. I know there are still a few out there, but how's that been progressing?
I have not heard back from the last two that still have software development to be done. I promise to have an answer for you next week, but they all had said early mid-April, so hopefully they're ready to go. We have seen some continuing tightening in the spikes markets from the market makers, which is a good sign. Of course, that has to do with their ability to have their portfolio risk as well. And then, of course, we have another expiration cycle coming up next week. We've got some really good studies we've done from last month's settlement, and we've got some additional information that'll be available on the website this month as well. It'll help market participants understand the liquidity we have here in MIAX in SPY, and the fact that the settlement in SPY here with our open and transparent auction should make the entire settlement process for spikes comforting to the marketplace.
Have the clearing firms said that if OCC grants relief, they'll follow suit in their PM, or because how have the clearing firms been handling the kind of what feedback have you heard from them on spikes?
Well, there hasn't been a lot of feedback yet because there hasn't been a lot of positions put on yet. So I don't have a good answer for you on that at this point.
Mark, as you're coming at us from the magic of your tin can and string, well, it's obviously been a somewhat interesting week over there in the marketplace. What's been catching your eye, and what's been lighting up the crazies in your pitch chat this week, sir?
The trade of the week. The open interest on the April 13 put was about 350,000 yesterday. Customer bought about 120,000 of them, from 16 cents up to about 22 cents. I had assumed that they were closing. Lo and behold, the VIX gapped lower, and we had 130,000 in open interest. Nope, the customer was opening. He bought these options for, call it 20, an average of about 18 cents, and they're 45.55. So I got to say to that guy that made 22 cents, 100,000 times, good job on your $2.2 million. Excellent work. Good sir.
Yeah, there are worse ways to make a couple of $1 million in the span of a day or two. You're right. That was the big trend for VIX options, in terms of where the big prints were going up this week. It was kind of the April 13 put show, and then a lot of other stuff. Even though there's a lot of paper on the tape today, we'll get to all that in a little bit. But look in here, interesting stuff, Mark. One thing you and I were chatting about earlier this week, and I wanted to kind of bring it up again here on this show, Vol Views, because it's kind of in the name. But we've been mentioning on the show for a while, particularly last episode, how when VVIX gets into that magical range on the lower end, usually it's when it breaks the 80 handle, gets into the 70 handle somewhere. We've said it many times. It doesn't usually hang out there for very long. Usually it's like the old adage at the bar, right? You don't have to go home, but you can't stay here. VVIX kind of gets that same feeling about it. It's got to go somewhere, and usually it's to the upside. And so people were kind of expecting a move, and that's pretty much what we got this week. VVIX spiked up about 10 handles at one point, up to about 89 or so. Right now it's at about an 85, so up about 6 handles from last show. And yet the delivery in the other areas is maybe not what people were looking for. Usually when we see VVIX pop, we see some commensurate, pretty decent move in the futures or out there and some other products out there to really kind of fall in line with that and deliver what people want from that perspective. This week, we kind of got the move we wanted from VVIX, but not really the move I think a lot of people were looking for in the broad market. Is that what you guys are thinking over there as well?
Yeah, it was interesting. I guess we got up to 14 and a quarter. We had one day where vol really did move, but that was about it. But, to that point, Mark, we're lower than we were last week in VIX. The VIX futures are way lower. And, here's the power of something like using volatility to trade. Remember that back spread that we talked about? I did the 1620 for a 2-cent credit. Well, that is a long delta spread. And Delta moved in my face, and that spread is up money by 2 cents. You could do it for even here. And the reason being that implied volatility, I know this show, of all shows, people should not be shocked by, but someone will be, that volatility can go up so much that the underlying of my trade, my long exposure, could go wrong, and I could still, call it break even or theoretically make money. And that is exactly what happened on these upside back spreads. And that is why when VVIX gets to 78, 79, or in the case of Spike, the Viking gets into the high 70s, you want to back up the truck on.
I'm getting told by here we go. That's better. Told by the producers here that we weren't going out to live stream. There we go. Hopefully the live stream can hear all that now. There we go. Trying to get Mark back, and we ended up killing our own audio. So there we go. The fun of a live program. Always good stuff. We've been talking for a while here on the program about the distance between, at least used to be the distance between the old VIX Cash and the futures themselves. That's come in markedly over the course of the past week. We're seeing, that front future, what was over about a point and a half distance between the cash and that front month future, now down to about a little bit more than half of a point premium from the future to the cash, that front April future. And then we've got the May contract, so 2 contracts out there. That's down over a point as well. That's about a 1.6 or so point premium to the cash from now. Mr. Meatball, do we have you back, sir?
Yes, we do. All
right, there we go. And I can hear you a little bit better, too. So, yeah, speak into the mic, yell, so the folks at home, they're not sending me emails, say, I can't hear Mark, which they will.
I've never heard people not able to hear me. That is a new one.
Yes, yeah, you sound like you're coming through a tin can covered in like Jell-O and honey and molasses.
Oh, really?
So, yeah, it's very quiet. So yeah, we're boosting you. I don't want to blow the listener. We can't boost you much more without breaking everything.
All right. Well, I'll yell as loud as I can.
There you go. But anything catching your eye from a VIX futures term structure perspective this week, sir?
Yeah, it's still, once you get past April, it's still kind of pretty wide. From kind of where we're expecting. And the back end is super flat. I saw a comment on Twitter. Somebody was saying, SPXY is doing better than ZIV. And, our old friend, the Thompson twin, said, the back end is really flat. And I looked, and lo and behold, the back end of the curve is pancake flat.
Is that one of their new positions? Is that they have a pancake? Is that part of the mullet and
no, that's mine. I got my 2 favorite trades are the pancake and the chicken and waffle.
Oh, well, there you go. So everyone has to have their theme. They have haircuts, and you have pretty much food. So I guess that works out for everyone.
My nickname's the Meatball. I better have food.
Got to have something, right? You got to have something. Everyone's got to have something. But yeah, the futures are an interesting thing to watch. By the way, a lot of people sent us this article. I want to get yours and Shelley's thoughts on it too, because it's kind of interesting. There's a big piece out there. I think it was Bloomberg who had this. We got it from a bunch of different people. I didn't see where it was all coming from, but the title was J.P. Morgan sees violent markets on a volatility liquidity loop. So we're kind of going back to that old volatility feedback days, but a little bit of a different spin on it. They have this analyst here, a quant, Marko Kalanovic. He's calling this negative feedback loop between vol and liquidity is to blame for some of the things we've been seeing over there right now. He says what he terms the negative correlation between volatility and liquidity has been getting stronger of late. And he says as the vol tends to rise, you're seeing market depth declining, what he terms exponentially. Sounds very scary. Which is exacerbating some of the price moves. He blames the sell-off in Q4 and the subsequent rally. He says the extremity of that, both to the downside and to the upside, was as a result of market liquidity somewhat fading as we're seeing the volatility move. There's interesting charts in here. I encourage listeners, if they haven't read, I know a lot of you have, if they haven't read it, to check out the article, because it has some interesting articles showing just the curve here of liquidity. It's interesting. I'm not sure what units he's using to quote this liquidity, but liquidity versus the VIX here. I guess he terms it S&P 500 futures depth is how he's looking at it. So interesting stuff here, and you can see kind of how that slope gets pretty steep once you start getting there to the downside. He kind of blames this shift on a couple of different things. What he terms slower human market makers. So we're still relying on too many humans in the mix, which of course S&P and VIX, most of that still in the pit. So he's leaning. He wants it to go the other way, to faster programmatic liquidity, as he terms it, that can rely on vol measures to determine risk taking and position sizing. Even though there is still clearly a large crowd who likes the other way too. They like a little high touch in their size institutional S&P and VIX paper. He blames some of the latter, the slower quote-unquote humans, on some of the market disruptions we saw last year, including October, which is interesting to say the least. He also says during times of high volatility, the VIX starts to dwarf other factors as a driver of market liquidity. Up to about 80% of liquidity variations he thought could be explained away by volatility alone. And he also, to add on more victims, more blame, more scapegoats, he also blames the shift from active to passive investing, saying the decline in overall active traders out there has really kind of driven away a lot of that liquidity as well. In his analysis, only single name active trading only accounts for about 10% of the volume we're seeing these days. So kind of a confluence of factors, confluence of events. It hits on a lot of interesting points. Shelley, I'm kind of curious. You're out there right now kind of talking with the prop shops, talking with the different trading desks, saying, hey, trade my Spikes product. Do you kind of agree with his conclusion that there is maybe a dearth of liquidity overall out there in the vol space right now, or in just the broad S&P space as well, the broad index space? And is that exacerbated by volatility? Do you agree with this, or you maybe take the other side, Shelley?
The view of volatility, or of liquidity we see, is how many market makers do we have in the quote? How tight is the quote? What's the size in the quote? And certainly with the reduction in market makers over the last several years, and back when being the dinosaur that I am, back when I was on the floor, there were hundreds of independent market makers in each exchange, and there's really a half a dozen large market makers, maybe a dozen or a dozen and a half total market makers today, and they're spread across multiple exchanges. And with the electronic trading and the requirement to quote every series, both sides, I mean, there's a million options contracts or option series able to be traded, and they've got quotes on both sides. They've got 2 million quotes out there in each market. There's going to be lower apparent liquidity in the marketplace just because of the amount of risk that's spread across all the different options and lower number of market makers.
Yeah, I think that lower number of market makers is a major issue. And the fact that, it's basically everybody quoting everything. About the only place where I've heard there's been a big increase in liquidity is actually in SPX, where, I've heard that a bunch of firms are sending in more and more guys to try and capture as much of that liquidity as they possibly can. There's also, I was actually on the CBOE floor yesterday. I noticed a couple of new market makers in the VIX pit, actually, believe it or not.
I don't know. Wherever you are now, Mark, we can hear you, so stay there. I like it. Hold the phone up to your mouth. You're out of the tunnel.
I'm out of my car.
Oh,
so we're good now. I'm actually using my microphone.
That seems to help quite a bit there. So let's look here and see what's been going on here this week. But interesting one. A lot of people hitting us up. I was kind of on the fence. I definitely wanted to see Shelley's out there kind of speaking to that crowd right now. I'm curious because there's obviously been a lot of people pointing the finger of blame at the quote unquote lack of liquidity, a variety of issues. The Volcker rule comes into that conversation quite a bit. The regulation making it not exactly viable for a lot of the former size players out there who used to be a lot of the big backstopping the liquidity out there. Can't really do it anymore. So we've seen them go away as a result. So regulation, a lot of other things. I haven't really seen the direct correlation to dearth of liquidity and volatility before, which I thought was kind of an interesting analysis out there. Again, listeners, read it for yourself. Check out the charts. It's kind of interesting. Let's move on out here to the activity we saw this week. Let's start in the land of spikes. Shelly, I was upset because we missed the big trade of the week. It went up. They had the temerity to do their roll from May to June, do that May 2025, that vertical. They had the temerity to do it during showtime last week, Shelly. So we didn't get a chance to analyze it. We didn't find out about it till right at the show was done. So we missed the big trade of the week, but we can talk about it this week anyway. It seems like the vertical, still the action-packed thing out there. I know Mark kind of alluded to it earlier, Shell. You guys are still kind of going out there and getting things prepped for people to really be able to onboard things. But anything really catching your eye? It seems like the roll was kind of the big trade. Anything I'm missing out there, Shelly?
Yeah, nothing you're missing. There's been some chatter amongst firms about possibly some interest in doing something larger going forward. The markets still haven't tightened up. The market makers are still waiting for us to announce in the list of future. Hopefully we can sometime in the next few weeks have an announcement about that. But there is a future plan for the product. And until that happens, the markets aren't really going to tighten up a whole lot. So we're kind of at the mercy of somebody upstairs wanting to put a position on and coming into the market to potentially facilitate their customer. But there's not a lot of activity right now yet, Mark.
Well,
markets are still a little wide.
Someone's still liking it enough to do that vertical roll at least. So they didn't just do it in May and go away. They rolled it to June. So interesting stuff. But yeah, I think for a lot of the size players in particular, that future will go a long way towards easing hedging concerns, tightening things up a little bit on the market maker liquidity side as well. Kind of hard to provide your true tightest market if you don't have an easy, readily available hedge. Obviously, you could do it with VIX futures and some others, but it's not quite one-to-one. You always want something one-to-one or as close to it as possible to get those markets nice and tight. We talked about the VIX futures before. Let's see what the options are actually lighting it up today. A fairly active day. The ADV has actually been trending down of late. It's down to about 530,000 contracts. Usually we'd see it north of 600,000 around this time of year, but a little bit light. But today, making up for it a bit, over 500,000 contracts on the tape as of showtime. So big prints going up out there. We'll break down what's lighting it up today and earlier this week in a minute. Let's first break down what people are liking out there. And we kind of talked about it. Mark kind of alluded to it at the top of the show. We'll get to it in the top 10 hot VIX positions right now. Number 10, the May 20s with about 214,000. Number 9, the April 30s. Again, the 30 strike maintains its grip, fevered grip on the imagination out there with 230,000 contracts. Number 8, the April 24s, 248,000. Number 7, the April 26th. Nice little April call strip going here, 265,000 of those. Number 6, what we got? 824s was number 8. April 26th was this number 7 with 265. Number 6, the April 22s with 266,000. Number 5, the April 20s at 341,000. Then we get to our first put on the list here, the April 12 half puts with 441,000. Number 3, the May 27s, 456,000. Number 2, the April 13 puts. Mark alluded to those earlier, and they are kind of they're the big dog of the week. Those things shot up over the course of the past week. That guy did pretty well. I got a feeling maybe he'll be taking some of those off, but we'll see. Maybe he's still feeling a little bit of the old downside love. If he is, he's got to get cracking because not a lot of time left with those bad boys. But it's about 525,000 of those open, including like 60,000 opening just in the last session or so. And number 1 still are the May quarters with 525,000 of those. So number 1 is pretty much a tie between the May quarters and the May and the April 13 puts, both about 5.25 out there on the tape. Total size open interest, 11.1 million open, about 8.4 on the calls and about 2.65 million on the puts. In terms of what was lighting it up, we kind of mentioned the puts. Those are pretty active, particularly yesterday. We saw another 53,000 going up yesterday. The day before, we saw the 100,000 going up. So that was kind of the overall trend of the week. I didn't see a lot going up today if he's taken them off yet. At least he hadn't as of showtime. Maybe that's changed since we started. The big trade of today looks like May vertical The May 7, 1 by 2 again, but doing it maybe a little bit differently than we usually see. We're seeing, usually we see the short 1 by 2s. This time going the other way around, buying the May 17, 25, 1 by 2, doing it. It's about 16,000 by about 24,000 times. So not quite 1 by 2, but on a ratio nonetheless. Looks like he's doing this for about 30. Actually, it's not quite 1 by 2, so it's not quite 33 cents, but it's in that neighborhood as he's doing it. Opening on, actually, no, it's not opening. So he could be taken off one of our previous, the usual 1 by 2s we see, usually ratio verticals, which are short one buying somewhere in the neighborhood of 2. So he could be taking one off, and if that's the case, interesting timing to be doing that because not really working out. Maybe he's getting the heck out of Dodge, but interesting stuff. Also seeing just some naked, quote-unquote upside, not far upside, but upside love nonetheless. When we're down here at these levels, it is upside. The June 20 is going up 20,000 times for 92 cents today, opening on the offer. We've got June 30 is going up 10,000, actually 20,000 times for those as well. Those are opening. A couple of different prints, though. A little bit of time between the prints. One for, looks like actually splitting the uprights exactly. 32.5 cents. They love to do that in the VIX land. They're never happy unless they split the uprights exactly. And also seeing them going up for 47 cents a little bit later. Both, so 20,000 of those, but probably more going out throughout the day. Opening, I should mention, on those June 30. So we mentioned the 30 strike still has some sort of magnetism. I've never really understood why that strike in particular tends to resonate, but it does, and it's doing it yet again. Today, we also saw some put spreads going up, 18,000 of the May, a little bit of a time diagonal, actually. The May 17, Aug 12 put spreads are probably, I'm guessing, going out on a limb and saying he's rolling and taking some of his profits and putting them back to work on the 12 strike there in August, in which case it's an interesting roll. I don't know, Mark, do you like that rolling from taking your, it looks like he did it for, looks like 268 maybe on those, on the May puts and not a heck of a lot on the Aug puts. You like rolling from the 17 down to the 12, or would you rather just take the 17 puts and get the heck out of Dodge?
No, I get it. I mean, it's you're pocketing it a bunch and taking a flyer on the balance. I don't think that I like the trade a lot. Why not?
Yeah, I guess I don't know how much he's doing 18,000. So I'm guessing I don't know the exact price he did the 12 puts for, but I'm guessing he didn't do. It's not going to be 1-to-1 with what he sold those May puts for. Wednesday, we said April 13 puts was kind of the life of the party. They went up 125,000 times on the 11th. That was kind of the big day for the prints out there. About near 20, so far today, actually, looks like another 26,000 have traded. So he has maybe taken some off, but nowhere near enough to unwind it. So size love there for the April puts. But you know what? I've been remiss in my hosting duties. I have buried the lead of the show here, and I apologize to you and to all of our listeners, because clearly what I should have led with, the big story of the week in volatility, is the power of volatility views, nay, the power of our audience has been revealed to the masses. What am I talking about? Well, it seems like everyone and their mother hit us up this week with this same link to this same press release. Everybody in our audience, I appreciate you all sending it. Even our buddy Simon, who couldn't be on the show this week, he sent us the link too. He said, look at what we've done. And he is exactly right, because how many times, listeners, how many times have you guys asked us, have we discussed on the show, even before January, even before VXX went out, back into Q4 of last year, maybe even earlier, we were talking about this VXXB thing. This is terrible. Who wants this? Who likes it? No one thinks to remember it when they're typing it into the ticker. It just doesn't roll off the tongue. It's terrible. I think we even had a question last week about that. Is this really it? So clearly, Barclays listened to us, and they decided they needed to make a change, because that's exactly what they announced a couple of days ago. They announced that VXXB no more as of the 1st, May 1st. So coming up in a couple of weeks, all of you out there, and I know you are legion because you write to us and you all sent us the link to the press release with all sorts of smiley faces and emojis and everything else. So everyone out there is happy about this one. So I think this just proves, Shelley and Mark, what I've been saying for a long time, that Volatility Views is indeed the most powerful force in the volatility space. You guys concur?
Without a doubt.
I think everybody knows that, and I've been saying that for years. That really we're the gold standard, the flag bearer for the volatility space.
I mean,
and therefore, if we tell you to do something and you don't, heed our warning. Nary soul has crossed volatility views and lived to speak about it.
Exactly. If we don't like your branding, it's dead on the vine before it even
exactly. I mean, look at everything we've done. We got the B dropped. We've got V spikes to be Viking. We've got you name it.
Shelly, have you signed off on that one yet? The Viking, is that are you in that wheelhouse?
I don't know. Again, being a Bears fan, I don't know if I could buy in the Vikings. That's a tough one.
No,
it's better than a
myself,
Packer. It's better than the Packers, right?
Anything's better than the Packers.
Yes.
We just lost all the audience in Wisconsin, but it's okay. But yeah, clearly, I know Barclays listens. I know these guys listen. Clearly, they heard the drum beat. So I applaud you, the Volatility Views listeners, for making this happen. Because clearly, you guys had a little bit of wherewithal in making all this come to fruition. So May 1st. You can stop sending us the questions now. It's going to happen May 1st. And clearly, you guys are to blame. Well done. You wanted it changed, and you got it. Speaking of, I won't even call it VXXB anymore. It's just going to be VXX again. Let's just pretend that little foray never happened. All right, VXX right now, kind of doing what a lot of people were really hoping it did a few months ago, which is take it on the chin. And it's taking it on the chin in spades. In particular, coming into showtime, it was right around the 26.5 level, about 20. Actually, it's below that now. It's about 26.40 or so right now. So coming in pretty aggressively, off about 1.5 handles from where it was this time last week. Saw a decent paper again today, about 90,000 contracts coming into showtime. ADV still around 150,000 contracts or so. Let's see what's lighting it up. Kind of as I say that, I know a lot of people did want it to go south. Now that I'm looking at the top positions out here, maybe I'll have to reverse that. It looks like a lot of people are looking for a little bit of upside. Again, they could be overriding these two, but I'm guessing the lion's share of this volume is not overriding of calls. Let's look here. Because I'm pretty the top 10 hot positions in VXX right now. It's mostly upside, which is kind of interesting. We got the April 30s. Once again, 30 strike. Pick your product. It has that magnetism to it. 21,000 of those. April 32s, 21,000 of those as well. 21,000 and change. Let's see, 25 puts, number 8, the first put on our list, with about 21,400 of those. Almost tied with the 826 put, about 21,500 of those. Number 7, number 6, the May 40s, 26,500 of those. Number 5, the 835s, 26, about 27,000 of those. Then number 4, our final put on the list. So of the top 10 positions in VXX right now, only a third of them, only 3 are going to be pretty much puts, which is surprising. 25.5 puts going up for about 29,000 contracts up here. Number 3, the May 38s with about 29,000 of those. Then number 2, the June 80s. These ones have been open for a while. The 30,000 of those, and the May 69, still number 1, 33, almost 34,000 of those. So still a lot of upside out here right now. So I know when you guys write into us, a lot of you lean downside, but the upside kind of running away with it right now, which is kind of, so maybe everyone got burned after the kerfuffle that was Jan expiration for VXX, and they decided to go the other way. And maybe they're getting burned the other way now, too. Hopefully that is not the case, but this OI is not exactly making me optimistic. Overall, open interest about 1.5 million exactly, about 910,000 on the calls and about 590 on the put. So even total OI, the calls dramatically, almost 2-to-1 outpacing the puts out there. In terms of the big trades out there today, looks like a vertical, the 5,043 of a May-June kind of diagonal vertical. 826 calls for 18 cents against the May 35 halves for 53 cents. Looks like they're doing this one. These are all pretty tight penny-wide markets, so it's a bit of a pick'em as to how they did this. Looks like maybe they sold it, but again, it's kind of hard to read into these when they're so tight here. I also saw yesterday a 1x2 spread. Put spread was the big trade. Looks like this is an interesting one, Mr. Meatball. I'll be curious to get your thoughts on this one. The May 27, 25 half. This is in the weekly, so May expiring on the 10th. So the weekly May puts in VXX. 37.50 of the 27 puts for about $1.39, and then so 1x2, 7,500 of the May 25 half puts for 68 cents. So it looks like they did the whole thing for a whopping 3 cents. So if I had to ask you right now, Mr. Meatball, May 1x2, 27, 25 half put spread in VXX for 3 cents, which way would you rather have it? Buying one, selling two, or selling one, buying two?
I'd probably want to buy one and sell two, but I think that may overshoot the target. Hopefully they're delta hedging. That could if vol doesn't drop anymore, that's going to be a nice one. But if we continue to kind of see VIX at 12 and the May future at a 2-point premium, they're going to be smarting. They're not going to like that one at all.
Well, yeah, that's kind of interesting. I was kind of with you. My first blush was, oh, you probably want to buy that. But then I was looking at the spread. It looks like he actually sold it for 3 cents, which is
interesting.
It's all here. I think interesting.
Maybe he's looking at. I get why you could. I look at that contango, and I say, what's going to make me some money is owning two, because this thing is going to be $22 that time. So. If he's doing some quote unquote roll yield math, then I get why I'm not totally unopposed to buying, collecting 3 cents and putting two on.
I had a similar kind of evolution on this. When I first saw it, I was like, oh, you want to buy that? And then I'm sure the guy bought it. And I dug into it a little bit. I said, wait a minute, it looks like he sold it. And then I thought, I don't love it, but I don't hate it a ton. I don't hate having two of those. That's for sure.
No.
I don't know if 3 cents is the way I wanted to put it on, but and there's a lot that could happen in between that could make you maybe wish you got more than 3 cents for that.
Yes.
But that's why I kind of hesitate. If he did it for better, maybe I would probably be a lot more on board for it. But yeah, it's a weird one. Listen, I'm curious what your thoughts are on that one. It's a pretty much almost an even money trade, 1x2. How would you rather have that on right now? Would you rather sell 1x2? Or buy one, sell two? I think your first blush and then maybe your answer after you think about it a little bit, maybe two different things, which is kind of interesting. Let's move on really quickly. We are back in it. It seems like we just wrapped up it, and it's already back again. I'm talking about earnings season. And you know what? We got you covered yet again on theoptionsinsider.com. So if you want to stay abreast of all the latest earnings, volatility, particularly the move reports and then the move results reports, which are oh so important. You can see how these things perform from our friends over there at ORATS. The place to find it, theoptionsinsider.com. I do believe Mr. Rocklops is going to be on that panel with Matt, right, from ORATS down at the OIC. So a little bit of a meeting of the volatility minds there should be kind of interesting. But let's see what's going on for their reports. We had, of course, the financials really kicking it off in earnest today. Wells Fargo, JP Morgan, PNC, a few others popping off before the bell here. Let's see. We actually already have the earnings move results reports for them. This is coming into the bell, obviously not intraday. Let's look at JP Morgan first. They closed 106 in about a quarter. They were pricing in right around $2, so not a lot of juice. And they delivered about a little over about 313 or so. So outperforming their straddle by a decent percentage margin there. So not bad out on that one if you're looking for a little bit of juice to start your day. Maybe that was the one you went for. Then we got Wells Fargo as well. They were about 47, almost $48 coming into their announcement. They were pricing in $1.13. So again, not a huge amount of juice. They were pricing in not even 20%, and they delivered a quarter. So a lot less than that, actually. So I guess coming into Showtime, they're about exactly $48. So interesting stuff. I guess not a lot of the financials really lighting up the tape and maybe giving a little bit of a boost to why perhaps the Dow is outpacing everything else to the upside today. Let's see. All right. Let's speaking of things that are coming through, let's see. A lot of your questions are coming through, so let's get to them with some of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's get to it. Let me start by giving credit to the listener who asked us about the name change last week, though Jim Daly. He wasn't the only. It was many people have asked us about that over time. He's just the most recent one to do it. And congratulations, Jim. I think you were probably the proverbial straw that broke the camel's back. Your final question in there was enough to say, Barclays folks say, you know what? We got to do something about this. So, Jim, wherever you are out there, congrats to you. Let's see. We got Jack in the chat. Jack Heneka. He says, hi. Well, hello, Jack. And he says, greetings from Europe. Well, we know there's a large European contingent who like to sling some volatility, particularly in France and regions of Germany. So greetings to you, Jack. I'm not sure where you're beaming in from, but welcome to the show here. This got a good one here. I like this handle. Curious George. Curious George wants to know. He writes something about, he wants to know about VXEFA silly prints, he terms them. Silly. I like that. He says, apologies if you're getting this twice. I guess he had some problems submitting it. He says, my question is, VXEFA has had some ridiculous intraday spikes. He said yesterday, so April 11th, and was with a high, when he wrote this, it was April 11th, with a high of 25.5. Can you weigh in on what is causing that and what the CBOE might do to eliminate these nonsensical prints? Also, really enjoyed your coverage of spikes. Are they going to do anything in the EAFE, EAFE, or the EEM range? Thanks for all the good work that you do. Well, let's answer the second part first, because that's probably the easiest. Shelly, this guy likes spikes. He wants to know if you're planning on expanding anytime soon to the emerging markets of Asia and Far East and all that other fun stuff. I'm guessing you got some work to do on to get the regular spikes futures listed first, but maybe you got something up your sleeve I don't know about. What do you want to tell our listener here, Curious George, who's curious about spikes, Shelly?
I think it's a great idea, and I think volatility in general, whether it be on MIAX or other exchanges, will expand to other products. But yes, you are absolutely correct in that our focus today is getting spikes up, launched and trading. First things first, the future, working with OCC to expand margin benefits, get some trades in the tape, get interest in the product, hopefully expand the entire volatility space along with our friends at CBOE, and then we can look at adding vol products on other underliers. It's certainly something that we're interested in. But I haven't even begun to crawl yet. I can't even consider sprinting. Method sprinting is something that I've ever done.
And I gotta say, I'm more excited for the spike ETFs that are based on spikes. That's going to be the real fun one. I can't wait to trade those off each other.
When we see the ETPs start popping off for those.
Yeah, what are we gonna call the VXX of spikes? I think we're gonna call it. Well, SXX just sounds maybe a little bit blue for us.
That's saying something coming from you, by the way.
So we got to find something other than the letters S, X, and X for our ETF. But I can't wait. I gotta say,
I'll put it out to our audience. They're obviously branding masters.
And I'd say SPX, except I think that's taken.
That might lead them in some hot water. I think. I'll ask the audience because they're the branding machines. Clearly, they get the brands changed. They've already created multiple brands in the volatility space or changed them. So, listeners, what do you want the inevitable ETPs on spikes to be called when they do come out? But getting back to the part of the question that's kind of interesting too, he wants to know about. If you're not familiar, by the way, listeners. EFAA is obviously the iShares MSCI EAFE. Say that 5 times fast. So it's an ETP that tracks exposure to Europe, Australia, Asia, and the Far East. VX EFA is obviously the VIX of that. And once he sent this email in, I hadn't been following it, so I pulled it up, and he is indeed correct. Crazy spike. It's been hovering around 10 to 11 for the better part of recent sessions anyway. And then all of a sudden, intraday, it spikes up to 25 and change, which is weird. And it was very quick, very, very, very quick. I'm going to say we see this sometimes in some other indices too. These indices are complex that they're using to calculate these things. And sometimes you get an aberrant data point that could really drive things. I'm going to go out on a limb and say probably an aberrant data point. Mark, do you guys follow VXEFA? And if so, did you notice this crazy spike?
VXEFA. So that's the VIX of EAFE. I know that CBOE lists a bunch of these indexes. They have them on gold. They have them on bonds. They have them on ETFs. They even have them on individual equities. I only pay attention. I only look at those when I don't have something like a live vol in front of me, so that I have and here's really the value of something like, spikes or VXEFA or something like that, is for that we're able to look at we get a really good idea of where implied volatility is, because, there are a couple trading programs that actually have good vol analytics in kind of the retail space, and even good vol analytics in the institutional space. A lot of institutional stuff, unless it's custom, is crap. Having these indexes allows traders to see, at what pinpoint are we in volatility within something like EAFE. So, I will look at it when I don't have access to real vol analytics. But outside of that, if it's not tradable, it's not something I spend a lot of time on.
Stadini in the chat is asking to repeat the question. Well, the question was they wanted to know about, there was a spike in VXEFA, an intraday weird, seemingly aberrant spike, and I'm gonna put it down to that. It didn't really last very long. And these things, when you have these multi-part calculations that go into calculating and disseminating an index, guess what? You get some weird outlier somewhere, and all of a sudden that makes the whole thing. Unless there was some crazy print going up in good old EFA, which I haven't had a chance to dig in. That's certainly a possibility, but I'm going to go out on a limb and say it was probably the latter, or the former, I should say, just a incorrect calculation intraday. Very briefly, short-lived. Let's see, we got time for one more here. Let's go to Eleni. Eleni asking, maybe Alan Y. Let's go with Alan Y. Alan Y. I get that if I buy VIX options, I can hedge them with VIX futures. If I trade spikes options, look at all these spikes questions going. Look at this. If I trade spikes options, can I also hedge them with VIX futures? Or do I have to do some sort of SPY straddle? It seems from my initial review that VIX futures are closely correlated enough to get the job done. Well, you're right that you can do that right now. I think, Shelly, you guys and the team over there at MyAx are working diligently so that you don't have to do that sometime soon. I know you touched on it already, Shelly, but what do you have to say for listeners like this, like Alan Y., let's say, who he can obviously hedge now, but he's looking for that one-to-one thing. I know you don't really have a time frame yet, but sometime in the near future, right?
Yes, absolutely. No pun intended. Sometime in the near future for the future. But it's a great question. We the biggest thing holding people back today from doing spike versus VIX future is the lack of cross margin at OCC. They're working on that, and a lot of the member firms have asked for that. So the reality is, from a trader's perspective, the basis risk between the two products is relatively small. Historically, they've tracked over 99.9% correlated, the VIX cash and the spikes cash. The future and the synthetic future should do the same, and the VIX future is a reasonable hedge for spikes options. But again, from a margining perspective, to have a spike future would take that basis risk out of the equation. But we believe
is it just a simple 10-to-1 like it is with VIX? So
it is.
If I wanted to do, let's say, a covered call, I'd buy one VIX futures and sell 10 spikes.
Yes, sir. Yeah, we have the same $100 multiplier on spike as CBOE has on VIX, and as I said, the index prices are virtually identical.
Nice.
Right now,
you know, I've been thinking.
apart.
And I've been thinking about our ETF. Or ETN? What, you know, we've got we've got the spike, which is the horns on the Vikings helmet. You got the Viking. What's a Viking without an axe? And we go AXX, axe, for the ETP when we eventually get a spike ETP. I like that.
I've heard worse. It keeps with the branding. Keeps with the, shall we say, the Norwegian branding.
It does.
For spikes.
You know, and you can show like a picture of John was on the show. John Smoller was on the show because he'd laugh. We could show like a picture of, you know, the spike index with his axe cutting off the head of like Ed Tilley.
Yes, there we go. I'm sure everyone would love that. Before we dispense any more quality-free branding advice, let's keep on rolling into the final segment. It is time to go into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, it's about that time to look into the crystal ball, see how our prognostication worked for this week. And this is, I'm going to have to declare it. We're going to have to move the show to Thursdays because I'm not liking this at all. I was on the bullseye a day ago, and today, you know, volatility has the temerity to continue eroding during the show. Who said it could do that? We're off even more now coming into the end of the show. We're seeing spikes at looks like about a 12.19, VIX Cash at around a 12.17 or so. So continuing to erode from where they were, flirting around 12.5 at the start of the show. So not a lot of love for my upside, which was a bullseye just a day ago. I was at 13.25. Simon was looking pretty good at the start of the show. Simon was at 12.65, but the continued erosion has hurt him as well. He would have been the winner if it stayed where it was at the beginning of the show, but nope. It decided to come off, and Mr. Meatball, you and the Rock Lobster take a joint victory. 12.37 was your rollover pick from the week before. You know what they say, the blind squirrel finding a nut. Looks like you got this one, sir. You're about less than 0.2 actually almost exactly 0.2 of a point away. So I shall doff my cap to you and allow you to go first, sir. Well done.
Yes. I have to say, let me lead off by saying, one, I want no harm to come to Ed Tilley. He's one of my favorite people. That was a joke.
I agree.
And
I could see him.
Yes,
it was a single tear in his eye as he's listening to this in his office right now.
I know. Ed is a wonderful human being. Two, go me. And what was my guess last week?
12.37. I knew you were going to do this.
All right, I'm going to go with 12.37.
Yes, exactly. Exactly, 12.37. Too bad. I'll have to have Simon Beeman, even if he can't make the show, Beeman his picks remotely so he could keep playing. Shelley, I won't make you suffer the ignominy of having to prognosticate on your own index. Instead, I will do it for you and for the audience instead with my own prognostication, which, in case I haven't said it, was pretty close about a day ago. All right, let's move into today. Rick said we're at about that 12, right around the 12.20 range in both spikes and VIX. And, you know, the market does not seem to want to give any shrift to the upside for extended periods. It ends up coming off eventually lately. And maybe that's going back to what our friend was saying before about the negative feedback loop of volatility. Whatever's causing it, we do have earnings season coming up. That usually tends to actually dampen down volatility a little bit, which is kind of interesting. You have those aberrant spikes of big names moving things, but outside of that, the net effect is usually a bit of a calming influence on volatility, which is kind of interesting. So that all would maybe point to continued downside, but I don't feel comfortable breaking the 12 handle this week. So I'm going to say, even though that could easily happen, I'm going to go the other way. I'm going to go, because Meatball's keeping right where he is, which is forcing me a little bit north. I'm going to go 12.75, so about a half a handle south of where I was this time last week. All right, everybody. That music, unfortunately, means we've come to the end of an epic journey through the world of volatility. Oh, what a journey it was. You revealed your power as an audience to the world. Well done. He talked about some spikes, some VIX, some VXXB. Not called that anymore. It's going to be called VXX for the foreseeable future. So if you write in with questions with VXXB in them, we will not answer them. Just out of a point of pride. We came up with some great branding ideas, some of them less great, for the future iterations of spikes. All sorts of fun stuff and fun was had on the show today. But before we go, let's go back around the horn. Let's start with you, Shelly. You know, Mark kind of alluded to at the top of the show. I know you're still working on getting the final two brokers on board. I know you're still working on the future, in addition to what's going on with Emerald. But if folks are interested, they want to learn more about spikes, maybe they have some questions about getting it added to their platform of choice, and they want to hit you guys up, where should they go? What should they do, Shelly?
myxoptions.com. Click on the Spikes logo, and there's all the information you ever wanted to know about spikes, historical market data, settlement information, everything you need to trade spikes.
There you go. Check it out, MyAX Spikes. Just type that in, MyAX, M-I-A-X, and Spikes. Just spelled like you think it is, into your search engine, and you'll get taken to that. You go to myxoptions.com/spikes. It's all there as well. You get the price quote, which is nice, handy little video, contract specs, all the things you might want to need. So you too can join our friend who's rolling his upside from May to June. Do a little size, and who knows? Maybe we'll pick it up for the show next week. It's interesting. We like to watch what trades are going on out there and see what people are trading. So if they're trading, we'll have to look at it. And Mr. Meatball, in addition to looking at spikes, if people are intrigued, I know you did a webinar and covering a bunch of different products yesterday. If they want to learn more, where should they go? What should they do, sir? Oh, looks like we lost him already. Mr. Meatball, are you there, sir? For your final plug.
Yeah, I was muted.
There you go.
Yeah, yesterday earlier in the week, I did a webinar on what VIX is, what spikes is, how the ETPs work. Tomorrow, I'm actually doing a paid webinar where I'm going to develop trade ideas in VIX, spikes, VXX, UVXY. I'm going to do a cross-margin trade between VIX and spikes since there's now margin relief. And if you want to learn how I would trade the way the vol space looks right now, go to optionpit.com, click on our events, and you can attend the event for $147. You'll get a free 20-minute mentoring session with me or Andrew, and a subscription to our volatility newsletter. So it's a pretty hefty deal for that $147.
There you go. Check it out. Optionpit.com if you want to attend events. Speaking of attending events, as soon as I turn this off, I'm off to attend Chicago. Who knows? Became the Star Wars Mecca for this weekend, at least, of the globe. So I might go check out some of that afterwards, which will be a little bit fun. Thank you for checking out our show today. If you joined us live, if you joined us after the fact, we like you guys too. Keep sending the questions, the comments, your branding decisions for names like VXX and everything else. The industry loves to hear them, clearly. And we'll see you back here next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.